Hello YouTube and welcome back to my channel. My name is Aaron Bossy and I'm the CEO of Aegis Bastion International Holdings, and I love real estate. Chances are, if you stumbled upon this video or you're here finding yourself on my website, you probably do too. So I just wanted to take a couple moments today to do a little self-promotional video for ways that I am helping out real estate investors that are up and coming, real estate investors that are established, with certain tools and shortcuts and things that I have found and made my investing career so much easier. Without further ado, I'd just like to take you to my homepage, which is right ahead. Again, the company Aegis Bastion International Holdings. We are a real estate focused company. I do not want to take too much time to go into why the benefits of real estate are what they are. I'm just going to put a screen up here real quick. Stability, cash flow, amortization, tax benefits, leverage, and appreciation. Those are some of the many reasons why anybody would want to even consider real estate investing, considering the differences between other asset classes. Could be financial assets, stocks, equities, bonds, you name it. I said this was a promotional video, and what I'm actually promoting today is the tool that I personally have developed and used myself when I am searching through MLS listings. Now, there's a bunch of advantages to this. With the real estate market being where we're at, it's extremely important that you can get offers in, you can get pertinent information as quick as possible. You're working with a reliable agent, somebody that understands your goals and your needs, what you're trying to do, and also understands the real estate investing game like I do. So what I've come up with, and this is specifically referring to residential or commercial multifamily properties. This is a Excel spreadsheet that I offer for sale. It's approximately $19.99 through my website. You can hit the Buy It Now button with the link below, which I am providing in the description box. $19.99 gives you access to download this Excel spreadsheet directly to you, and a few of the things that it actually offers and does for you is some very important things. These are going to be things that if you are looking for financing, you are going to be dealing with a bank, you're going to be dealing with mortgages, you are going to want to know these ins and outs. And you're going to want to know these things as soon as possible, because the more information at your fingertips, the more effective that you're going to be looking for your properties and also executing on owning those properties as well too. So the big thing on here, this right-hand column, these are really, really important stuff that every bank will probably look at and definitely ask you about as far as to, is this a deal or is this not a deal? And your only concern when you are looking through properties, if you're looking for financing, you need to present to your financier, the bank, whoever you're taking your mortgage out from, that you have a deal and you want to show them why, and this is exactly why you need this tool that I have come up with. I'm going to switch pages right here to actually an MLS listing. So like I had mentioned, this tool is designed to go hand in hand with your MLS listing tools. Now, I live in Western New York, which we have a unique thing where we have a lot of residential multifamily properties in the 3 or 4 unit range. So it's the maximum amount of units you can get while still getting residential financing, but we can also cater this to commercial financing as well too. So let me explain. I'm going to go ahead and pull up my spreadsheet right here. So this is going to be the program. This is a live demonstration of how this is going to work for you, what you can expect, the numbers you're going to be able to see right off of me looking directly at an MLS listing and filling this in right for you. So we're looking at 383 Thurston Ave. This is in Rochester, New York. Great. Okay. MLS listing 199,900. Let's see. Go ahead and put that in there for the list price. Oop. Before I go too much further, I do just want to take a second to say this is a locked spreadsheet. When you download this, you will notice that you cannot modify the cells, you cannot modify the formulas. I do this on purpose to make sure that as this is distributed out amongst peer-to-peer, the integrity of the formulas remain the same. When you also download this, you are not only getting the Excel spreadsheet file, but you're also getting 2 PDFs that will accompany the instructions how to use and also how I came up with the formulas that we come up with. All of these are based on industry practices, just to make sure that this spreadsheet and the formulas stay intact. I had to lock everything. Hopefully you guys can understand. So going back to this listing here, we got assessed value. We can go down here, and the wonderful MLS tells us this assessed value is $80,000, so we don't have to look through the tax records too far. Appraised market value, if you know what this is already, you can go ahead and put this in there. For the simplicity of this demonstration, I'm just going to keep it as the list price. And I'm also going to assume that the actual sale price is $199,900 right there. Now, I'll just show you this real quick. $215,000. If that was the appraised value of the house, you'd essentially be getting a $15,000 equity position in purchasing this right away. That's what the wedge opportunity would be. That's what we consider that in the business. Now, also going back to the MLS listing, we have total taxes, which are right down here, $4,231 right there. And homeowners insurance, if you have a really good agent that you work with, you could probably already be sending some quotes over to the based on the property. They should be able to provide you those. I'm going to use an average rate that I've seen for properties like this in my area. I'm going to do about $1,600 a year for a landlord's policy. Now, going just right back up to the top of the MLS listing, square footage 3528, and we also have this built in 1925. Okay, 3528, great. 3528, and also year built 1925. Great. So going on down here, this is going to be filling in, like I said, the basics of the property. So we have a 4-unit property, and the cool thing about the MLS listings is that they actually show you what the rent rolls are. This is going to be really important if you are serious about this, if you're looking at investment properties. If everything's rented out, you have no vacancy, this is going to be important to know. So this thing's bringing in about $600 per unit per month. And other income in this field, you'd be able to put like laundry, just anything else that you could charge a tenant for that would be just like a specific use to that. We also take into account vacancy. This is a really big thing. This comes into hand when you're thinking about doing a owner-occupied, or if you're doing just a straight landlord's policy. If you are doing an owner-occupied, you should probably be putting in at least one vacant unit here. It's going to show you about, in this example, a 25% vacancy rate. So all of the math is going to take into account that one unit being gone, which is really important. Now, this is really cool too. The other thing, this is the Schedule E expenses. This is another backside reason as to why you get into real estate. This has to do with the taxes and the way we handle taxes. Every one of these items is a line on the Schedule E of a rental property: advertising, repairs, supplies, utilities, you name it. There's 3 categories on here that are not modifiable. That's going to be the insurance, the mortgage interest, and the taxes. The reason for that, because out of that 4-part equation of PITI, the one thing that you cannot deduct is principal. Everything else is totally fair game, can deduct it according to the IRS tax codes. That's extremely important. And towards the end here, I'm going to move on here just a second, but towards the end here, the quick industry tips. A lot of people are familiar with the 2% rule, familiar with the 50% rule. This is something that you can do to get a gauge. And the reason you're going to see colors on here, red is going to be bad, yellow is going to be average or adequate, and green is going to be stellar performance. So right now we have an average, an appropriate amount of performance here with the 2% rule, so that's good. Now, down payment wise, so we are going to be a landlord. We're not going to be interested in doing owner occupied. So what we're going to do here is I'm going to put a $20,000 down payment on. Now this spreadsheet also calculates property mortgage insurance if you have insurance needs of less than 20%. And this is primarily only going to focus on residential folks. Commercial properties, typically the down payment is anywhere from 25 to 35%, so that won't even be an issue. And with the down payment here, we'll go ahead and put in $40,000. That's all we can put in. Great. So we have the amount financed now. We have our closing costs is about a 3% average. False, we're not doing any property mortgage insurance because we did satisfy the 20% down. And now we can get to see the kind of total closing costs here as far as what that would be. Now, interest rates. So this is why I had brought up today's interest rate. So for a 30-year fixed, we're between 2.75 and 3%. Basically, what I'm going to do, I'm going to put 3% in there. If you deal with points, if you know what points are and you've gone through real estate investing before, you can add those in there. I'm going to omit those for the time being, and I'm going to do a 30-year mortgage. Now, this beautiful spreadsheet is going to automatically do this for you. We're going to be able to calculate the principal and the interest separate, and then the PITI plus PMI if necessary. And you have a full 360-month amortization schedule if you want to know what you're paying for towards principal or interest. All that's filled out for you. Now here we go, we get to the investment metrics. This is the stuff that the bank wants to know. This is how you make your argument. You say to the bank, hey, after all of my expenses, we have a net operating income, about $18,000 a year on this property. It's producing about a 9.09% cap rate. We have a debt coverage ratio of 2.25, which is great. The only thing that they could probably come back on you and say is, hey, maybe the loan to value ratio could be a little bit higher. This is where you want to know, what is the loan to value ratio dependent on? Well, it's dependent on the down payment. Did you want to put $40,000 down? Did you want to put more down? That's really up to you to decide. But this is going to give you everything that the bank's going to want to know. And if you can tell them these numbers and you can provide those figures for them, they're going to be like, okay, this is a deal. They won't second guess you. Desired cap rate now, say we're getting a 9.09% right there. Say if you wanted to increase that a little bit, say like 10%, this is going to tell you should probably be paying $181,000 for that property, if that can make sense there for you. So go ahead and zero that out. Now, principal paydown. So this is the amount of principal that gets deduced every single year, and this is based on the adjusting amortization rate as well too. So year one, you've put in, basically principal paydown is the same as equity buildup. You've put in $3,338. Year five, you've put in $17,738. At the same time, you're deducting all of this money from mortgage interest. This comes off on the taxes. And you have the first 5 years of performance. So how does this even look? All of these different little things here, the revenue generated, the income, the appreciation, the mortgage interest, the property tax, the property depreciation. What is our total value index of owning this property for 5 years, assuming that we can get that performance out of it? Well, we're considering about $90,000 in revenue. We're building up about $17,700 in equity. The asset itself is appreciated 1% over those 5 years to about $210,000. But the big crazy thing, and this is why my spreadsheet is so different, is because we have all these tax shelter write-offs. This is the combined amount of all the money that you're writing off, telling the IRS this was an expense of doing business. That's incredibly huge. $81,000 in tax write-offs over 5 years. Wow. Okay, 1% appreciation basis per year. That's very straightforward. The depreciable basis. Now, with the IRS, we use the modified accelerated cost recovery system. This is a way for you to put in, and this is the most accurate way to do this based on the IRS. You can put in the land value and you can put in the months in service. So this will tell you the first year depreciation. So, for example, if you were to have the property in service for half of the year, you put a 6 months in service, it would allow you to tell you how much you can deduct in that first year for depreciation, so long as it is a rental property and has more than one unit. That's the big thing there. Now, the total value index, this is over 30 years. This is a huge thing too. This is the big picture. This is like opening your mind. How many times do I want to replicate this over time? $545,000 in revenue, close to $60,000 in equity built up. Your assets appreciated close to $70,000 and you still have it, and you've been able to write off $309,000 in tax write-offs over those 30 years, all while keeping that in your name and keeping that in your under your property there. This slide here, this is debt to income calculations. This is more based on financing. Whenever you go and speak with a bank, they're going to talk about DTI. They're going to want to know your front end ratio, your back end ratios. This is a way for you to be able to put in your annual income, and you can either itemize this based on monthly mortgage or based on total outstanding mortgages, auto, student loans, credit card debts. This is going to give you your DTI with the purchase of the property. And that's going to be really, really important too, because you're going to want to know, what am I at before, which is not showing here, but what am I at after, and how is this property going to help actually increase or decrease that DTI ratio? Very important to know. And lastly, all of this information is combined for you in this really nice final slide here. This just shows you the appropriate and pertinent information for everything that you'd want to know. You'll have the percentages there, you'll have the dollar amounts there. All that's going to be nicely consolidated for you on that. Now, there's a lot of things you can do with this, and this is universal with a lot of different listings. I just wanted to take you through this real quick. Guys, I'll end the video here right now. If this has been, if you think this has been important to you, if this makes sense to you, if this is something that you'd start to like utilizing, please go ahead and follow the link below and go ahead and just purchase the item for you. It helps me out. It helps me with able to create more content and more information and tools like this. And also to help out the YouTube algorithm too, please don't forget to like and subscribe. I would greatly appreciate it. I know that. Until next time, guys, I look forward to you all, and I hope you have a great rest of your day, and we will talk to you soon. Bye-bye.